Have you ever wondered how people make money through buying shares in Kenya or any other country? Maybe you've heard about Safaricom shares, you have heard about Equity Bank, you've heard about KenGen, or you might have heard about EABL, but you basically don't know where to begin and what to do. Now, in this video, I'll take you through a step-by-step process on how to buy shares, on how to invest in shares. We shall be looking at benefits, we shall look at the risks, I'll take you through how do you get the right shares. And then finally, I'll take us through the 10 stocks that you should be watching or observing in 2025 and 2026. If you're ready, let's get started. How do you get started? How do you buy shares in Kenya? Look at shares as owning a part of a company. If the company grows, the small bit that you own also grows and becomes more valuable. If the company shrinks, also that portion that you bought also becomes smaller because it's part of that particular company. So these are the steps of you buying shares and you getting started. The very first step is you open a CDS account. A CDS account is like a digital wallet where your shares are stored. You remember the same way you have a bank account where your money is stored. Now, a CDS account is also a digital account, a wallet where your shares are stored. Anytime you purchase shares, they are stored in that particular account. If you purchase different types of shares, they are still stored in that account. You normally open a CDS account through a licensed stockbroker or directly through CDSC app known as Dosika. I will leave a link in the description for you to have a look at it. You need the following documents: ID, KRA PIN, passport photo, and bank details. Second step number 2, you choose a licensed broker. You can't buy shares directly on the Nairobi Securities Exchange portal. You need a broker, and a broker is like a mediator. A broker is like a shopkeeper who will help you to buy and sell. The most commonly used brokers on the Nairobi Securities Exchange are NCBA Bank, NCBA Investment Bank, Standard Investment Bank, SIB, Faida Investment Bank, Dyer and Blair. There are others. I will also leave a link for you to have a look at them in the description. All these brokers are licensed by the Capital Markets Authority, so they are safe to use, and once they are licensed by Capital Markets Authority, they add a layer of security just to make sure that the shares that you store with them are safe. Step 3, now that you have your broker, you fund your account and place your order. You deposit money through either M-Pesa or bank transfer. Remember, we said you also need a bank details. So you deposit money through a bank transfer or an M-Pesa. Then you tell your broker which company shares you want to buy and how many. If you want to buy Safaricom, you tell them. If you want to buy Airtel, you tell them. If you want to buy EABL, you tell them. The last step, the fourth step, that you track your shares. Your broker will give you a statement, and you can also check your balance on the CDSC or the NSC website or portal. The next important step that people always want to know: how do you choose a stock? I will take us through this process slowly so that you get a grasp of the 5-layer checklist. So I have prepared this through a 5-layer checklist that we shall be going through, and this is the same process that you'll go through when you want to choose a stock. How do you know which share to buy? So this is a 5-layer checklist, and just think of it like peeling an onion. You remove the first layer, you remove the second one, the third one, the fourth one, and every layer that you remove, it helps you to understand the company, if the company is good or if the company is risky for you to go ahead investing in that particular company. The first layer is business quality. You have to ask yourself these questions. What does this company actually do? And how is it important in Kenya? Or how is it important to the economy? Look at Safaricom, for example. Safaricom runs M-Pesa. Everyone uses M-Pesa on a daily basis. That's a very strong demand. You therefore need to look for companies that dominate their space, companies that dominate their ecosystem. They have a strong brand or something that competitors can't easily copy. Look at M-Pesa, for instance. We've had other mobile money transfers, but nothing comes close to M-Pesa. So that is a field that has been dominated by Safaricom. So that's the first layer where you're looking at the business quality and the offering that the business offers. Layer 2, profits. And under this, we look at the income statements. Check if the company makes more money year after year, continuously for the last 4, 5, 6, 7 years. Has it been making money year after year? Look at the sales, which is the revenue, and the profits, which is the net income. If the profits keep rising, that's a healthy company. A quick example. Equity Bank keeps growing because more people use its loans and mobile banking services. Therefore, this layer for profits basically now becomes a good indicator that the company is good and not risky for you to invest. Layer number 3, safety. And under safety, we're looking at a balanced sheet. Ask yourself this question. Does the company owe too much debt? Now, where do you get this information? You get this information from the company documents. We shall explain them later on. If a company has got huge loans but not enough cash, then it's risky. Strong companies, they normally have manageable debt and they have got very good assets. Layer 4, we look at cash flow and dividends. Our profits on paper are always good, but that the company actually generates cash. Good companies turn profit into real cash. Many also pay dividends, small cash rewards, dividends, and which are basically small cash rewards to shareholders. A good example is BAT, which has been paying a very, very strong or very high dividends every year for the last couple of years. The fifth layer, which is the last one, is valuation, prices versus value. Even good companies can be a bad investment if the share price is too high. Ask yourself this question. Is this share cheap or expensive compared to its earnings? Look at what we call, what we refer to as PE, price to earnings ratio, the PE ratio. If it's low compared to others, it may be undervalued. If it's high compared to others, then it's not undervalued. Look at dividend yield. This means how much dividend you get compared to the share price. The tip here is that how do you spot undervalued stocks? Look for companies with low PE but strong profits. If you find a company that has got a low PE ratio but strong profits or high dividend yields with steady cash flows, this is an undervalued company. Example, if Safaricom earns 10 shillings per share, but the price is only 50 shillings, the price of a share, then the PE ratio is 50 over 10, which is 5. Now, if the competitor trades at 10, if we have a competitor whose PE ratio is 10, then Safaricom might be undervalued. So those are the kinds of arithmetic that you make. Let's look at benefits and risks of investing in shares. The first benefit, dividends. Just the same way you earn passive income, you earn dividends when you own shares of a particular company. Benefit number 2, shares can grow in value. So you will sell after some time, you sell at a profit. If you bought a share at 50 shillings and it has appreciated to 60, then you have a margin of 10 shillings per share. So if you had bought a million shares, then you made 10 million Kenyan shillings passively. Benefit number 3, you become a part owner of that company. Those are the 3 benefits. There might be other benefits as well. These are the risks. Share prices, the same way they go up, they can as well go down, and therefore you stand a chance of losing your money. We have got poor management or scandals that can damage the company reputation, and this will significantly affect the company and the returns of at the end of the financial year. Then we also have economic downturns that affect all the shares in an economy. I researched on the 10 shares that you can look at. In this research, I've looked at the company, I've looked at the price of the share, then I've looked at the minimum shares that you can buy. Now, initially, there used to be a cap or a clause on you being only purchasing shares in bundles of 100, but this one was scrapped off, and you can buy even one share. Like currently, you can buy one share, 2 shares. The cap of 100 shares was removed. So these are the 10 shares that I researched that you can have a look at. Safaricom. The first one is Safaricom. Why did I settle on Safaricom? Because Safaricom is Kenya's leading telecommunication company, telco. The M-Pesa cash engine, massive network effects. It has recently expanded to Ethiopia, and it has consistently paid dividends for a long period of time. The current share price of Safaricom is 29.45. These values might change, but at the time of recording this, the current share price is 29.45. The minimum price you can buy, as I've said, is just one share. So the minimum amount of money that you need is 29.45 per share. But now multiply that with the number of shares that you like to invest in. Company number 2, Equity Group. Equity falls in what we call Tier 1 regional banks. It has got a strong return on investment and its earnings growth. Over time it has developed, and it has been known to be one of the best performing banks in Kenya for the last close to 10 years, and it has got a solid dividend history. The current share price is 57 shillings. You can buy a minimum of one share. The next company is KCB Group. KCB is large. It has got diversified balance sheet. It has got a regional footprint, and constantly it is improving the cost of risk. It has proven to be a reliable dividend payer for the last good couple of years. The current share price is 57.75. The next company is Cooperative Bank. Coop Bank is a strong bank. It has a sticky retail base. It has been efficient, and constantly it has also been paying consistently for the last couple of years. The current share price of Cooperative Bank is 21 shillings and 40 cents. ABSA Bank. ABSA also stands as a strong capital position. It has been growing. It has a strong corporate and SME coverage. It is also thinking forward, like tech forward, and it has constantly paid a steady dividend. The current share price is 20.70. Then we have NCBA Bank, the leader in digital lending and asset financing. It has got a robust net interest income and attractive dividend profile. The current share price is 70 shillings. We have East Africa Breweries Limited, EABL, is the beverage giant with a brand uh, recognition. It has got margin recovery potential, and it has a strong track record of paying dividends. The current share price is 215 shillings, as I've said at the time of recording this video. The second last is BAT. Not second last, the eighth one is BAT. The current share price is 425.00. You can purchase one share. Second last is KenGen. This KenGen is a dominant power generator, geothermal, and there might be other sources. It has had a constant or regular, it has been a regular dividend payer. The current share price is 8 shillings and 88 cents. Then the last one is Jubilee Holdings. It's a regional insurer. It has been paying dividends consistently for a long period of time. The current share price is 320 Kenyan shillings. As I've said initially, most brokers now allow single share orders. No, it's no longer that you can buy a minimum of 100 bunches of 100. You can buy a single share. So check the company that you want, check the price. The prices keep fluctuating. Check the price and make up your mind on what you will need to buy. In summary, this is what we've said, just putting it all together. This is what you need to do when you want to invest in shares. You open your CDS account with your broker, and then you pick a good broker. You use the 5-layered checklist to analyze companies, then start small, buy shares, and hold on to them for a long period of time. I gave out an investment guideline. So before you buy shares, here are 5 simple rules that will guide your journey in the buying and selling and in your investment journey. Step 1, always do your research, do your due diligence. Don't just buy a share because a friend told you to buy so, or because you had a particular person buying. You have to do your research and look at the trend. Observe the trends in the news. Take time to read the company financial reports and records. Understand what the business does and check if it is making enough profit. Guide number 2, don't put all your money in one basket. I always say this is the thumbs up rule when investing. Don't put more than 20% of your investment portfolio in one company or in one asset class. This way, if one share falls, the rest of your portfolio will still be there to protect you. Remember, investing is a game, and the moment you lose your money, you are out of the game and you can no longer continue playing. Guide number 3, invest for long term. Shares are not like, it's not a quick cash, it's not like betting. Prices will go up and down on a daily basis, but the people who will build real wealth at the end of the day are people who are able to hold on for those shares and allow dividends to grow and pay them for a long period of time. Fourth guide, reinvest your dividends. When you receive dividends payout at the end of the financial year, consider using them to buy more shares. This way, your money keeps growing and multiplying at a faster rate other than taking the dividends and starting again on a new slate. The last guide is avoid emotional decisions. Don't panic when prices drop. Don't rush just because everyone else is buying or everyone else is selling. Stick to your plan and stay patient and let logic guide your choices. Remember, initially you had done your research just to make sure that what you are buying, you are buying shares from a good company. So don't panic. Investors like Warren Buffett, they invest for a very long period of time. They have had shares in companies like Coca-Cola for 20, 30, 40 years. And over time, their portfolio has grown to be a very big portion. So hold on to your shares for long should you decide to buy shares of a particular company. And that is it. That marks the end of this video. It was a bit detailed and interesting, more lengthy than I expected, but I hope that you got value. I'll see you in the next video, and happy investing, and stay safe in the financial sector when investing.